Hello, I'm Malissa Fritz, host of It Takes a Co-op. I am excited for you to spend some time with Neale, president of CHS Hedging. Nelson, thanks for joining us today.
Delighted to be here this morning, Melissa.
Wonderful. Tell me a little bit about yourself and what brought you to the co-op system.
Absolutely. So I'm in my 6th year at CHS as head and president of CHS Hedging, which is our futures and options brokerage here within the company. But it's my 12th year within the agricultural cooperative system. And I have to say it's been a real joy and a pleasure for me to serve in the cooperative system. I've had a chance to bring a lot of my experiences from other roles to bear for the benefit of the agricultural community. It's just been a whole lot of fun for me.
Let's dive right in. Let's talk about the U.S. economy. Give me an overview of what's happening.
Well, it's almost what's not happening in the U.S. economy because there's so much going on, Melissa. Certainly, we have the Federal Reserve, and they're in charge of setting the benchmark interest rate in the country. And as you know, they've moved that interest rate up quite considerably to fight inflation. And now they're at a point of potentially pivoting and bringing some of those interest rates down. And what they're watching, I think, most closely are two items. That is the overall health of the economy, or the GDP, and employment numbers. And if you look at the GDP of the U.S., the second quarter print was around 3%. And that's a really strong number. If you look at the Atlanta Federal Reserve forecast tracker for the third quarter GDP in the United States, it's sitting at about 3.4%. Again, a strong number. If you look at employment numbers or unemployment numbers, whichever way you would like to look at that term, we've got pretty strong employment. Our job numbers at the end of September were very strong in this country, above estimates, I think. And that, I think, gives a lot of confidence for the Fed to go ahead and begin to pivot and maybe back off on some of those higher interest rates so as not to potentially damage the economy as we move forward.
Because those are good numbers. I mean, we heard we're building, we're getting better. That's really positive. But we also know that those higher interest rates definitely impact agriculture. So let's talk a little bit specifically about agriculture and agribusiness. What are we seeing and how are those impacting what farmers are and the decisions that they're making every day?
Well, Melissa, just like interest rates affect you and I on our car loans and on our mortgages, that overall interest rate sets the tone for operating loans and other loans in agribusiness, much as they do for all industries. It's not just agriculture. Let me give you an example. If I'm a farmer, and 3 years ago I had an operating loan at about 5%, which was more the norm, and compare it to today, which might be around 9% for a variable rate loan. If we look at a typical farm that holds cash for roughly 9 months at that rate, the difference can be somewhere in the neighborhood of $25 to $30 per acre. And if you juxtapose that against a profit line or profit margin on a per acre basis that's either very thin or perhaps today even negative, that adds up really quickly. So a tremendous impact. And if we can get relief on rates overall in the country, that's certainly going to propagate through to variable interest rate loans in the agricultural community. If you think about the U.S. economy as a whole and how that relates to the ag economy, I think, is fairly resilient regardless of what happens at the U.S. economic level. As our economy slows down and if we do head for a potential recession, what that ultimately means is consumers typically trade down in products, from premium products to less premium products. But at the end of the day, the agricultural components that make up those products are ultimately still there.
I mean, we certainly have seen record profits over these last few years, and now we're starting to see that down cycle even more. As you think about those cycles, how long do they usually last? And then as we think about that, what should farmers think about as they're trying to manage through these down cycles?
Melissa, you hit the nail on the head. We are coming out of a tremendous run in the agricultural sector, and it's benefited farmers. It's benefited retail cooperatives. It's benefited large multinationals in the agriculture space. So it's just been a tremendous run. But to answer your question directly, those very profitable or high-level runs in agriculture typically last in the neighborhood of 2 to 3 years. And the down cycles are normally in that 4 to 5 year run. So if you think about where we stand today, we peaked out on this most recent cycle in 2022. And we had net farm income, I think, north of $180 billion. 2024 is forecast in that $140 billion range. So we're talking about nearly a 25% decline off of that high. So we're coming off of the peak. We're heading into a little bit more of that trough area. For your second question, what do I do in the face of some of these changing dynamics in the agricultural economy? I think the answer is simple, and that is plan. Manage to a plan. Have a plan. The best advice I can give is establish a margin target for your operation, especially if you're on farm. Establish that target and then begin to manage your input price risks and your output price risks to hit that target. The worst outcome is to not have a plan. So establish a plan, establish a reasonable plan, and go execute against that target or that goal.
And certainly with your cooperative partners, you're going to have the group and people, the experts that can help you to build that plan, which is always helpful. So, I think as we look at whether it's the cycles that we go through or just agriculture in general, it's constantly evolving. And it's certainly a global marketplace now. It's no longer just about what we're doing at our local co-op or what we're doing even an hour away from our co-op. It is literally about what's happening across the world. So talk to me a little bit about the trends that we're seeing, the things that are impacting, how we're making our decisions, geopolitical issues, all those kinds of things. Share a little bit about what you're seeing today.
Well, I could probably spend 30 minutes on trends alone, Melissa, but I'm really going to focus on two.
Okay.
And they just happen to be countries, and they have such an impact on global agriculture, much as the United States does, and that's really Brazil and China. Let me start first with what's happening in Brazil. Brazil is a tremendous origination point for grains and oilseeds, corn, soybeans especially. In fact, their soybean yields in that country are in the neighborhood of 52 to 53 bushels per acre. And that's not dissimilar from the types of yields we get from our U.S.-based soybean crops. So they've really risen in terms of their strength as an exporter of soybeans. But I think a lot of the attention now within Brazil is focusing on corn. They have what's called their safrinha crop, which is their second corn crop, and it's their largest crop. And they've become quite adept at growing corn as well. And that's creating a strong competitor for U.S. agricultural products on the global market. They have plenty of land, and certainly they have been and may continue to convert into cultivatable lands to expand their crops. So a lot of changes in Brazil, and they're becoming much more of a competitor perhaps than they have been in the past. The second is really, where does demand come from for U.S. agricultural products and maybe global agricultural products? And I want to talk about China and the changes that are going on there. For the last 20 to 30 years, China has been a tremendous destination for, I would say, all commodities products, whether it's energy or whether it's agricultural products. And certainly United States agriculture has benefited from that destination point. But demographics are starting to catch up with that country. China had a one-child policy that's been in place for 30 to 40 years. In fact, they have not met the replacement birth rate since the late 80s or early 90s, and that's beginning to catch up with them. I think the CME had a report that suggested that by the year 2030, there'll be more Chinese 65 years and older than those 15 years and younger. That simply means that the demand profile of China is going to change. Now, it's not an on and off switch, Melissa. This is not going to happen next year, but over time, the import demand from China is going to change. And I think not only U.S. agriculture, but global agriculture is going to have to adjust to that type of shift.
And we're going to have to think about global as a necessity for American agriculture to succeed, because it's going to really let us or help us be able to meet those demands of our buyers and whatnot. But any additional thoughts on why global is so very important as we think about agriculture these days?
Well, in most cases, we are an active participant, U.S. agriculture, in global export markets, and they fulfill a key component of demand for the crop that we grow annually. So as the dynamics of those export markets change, it has an impact on ultimately total demand for our product, where our product goes, and ultimately prices. And obviously, we started our conversation talking about changes in the agriculture cycle. Changes in export destinations and export demand certainly reverberate back and pass back through U.S. prices at the farm gate.
Mm-hmm. Well, and there's certainly probably nothing that affects those inputs or those the work we do or the business we do with other countries other than tariffs. I mean, it's a huge impact. Talked a little bit about tariffs and where you think we're going to see things evolve.
Well, as you've seen, Melissa, tariffs are a big topic in the news, and they're a complicated topic and an impactful topic and concept, especially when it comes to agriculture. A couple of key points to make. Number one, tariffs are generally inflationary. I think that's pretty much of an accepted rule. When U.S. companies import goods and there's a tariff on those goods, ultimately they're going to pass that cost on to the consumer. May not be immediate, but eventually that cost increase is going to be passed on to the goods that they're producing for the U.S. consumer. So that's point number one. Point number two, tariffs can really be disruptive from a supply chain efficiency perspective because supply chains are trying to optimize costs and trying to meet cost of goods points. And when you have tariffs, that can create a shuffling or substitution patterns, those types of things that can ultimately disrupt a supply chain. The third point I would make on tariffs is oftentimes they're retaliatory. For every action taken, there is a reaction, not always equal and opposite, but certainly a reaction. And I think we've seen that before. And this is where, in my mind, agriculture really comes into play. If we put tariffs on imports into the country for a variety of products, other countries will respond in kind. And oftentimes they respond with tariffs on agricultural exports coming out of the United States. And I think we've seen that before. So that's the biggest watch out when the topic of tariffs comes up.
All right, so let's talk good stuff. As we know, farmers are at least realists. But let's talk about bright spots. What bright spots in agriculture exist?
Well, the first thing I can say, if we go back to the agricultural cycle, my mantra is, look, farmers and U.S. agriculture have been here before. It's not the first rodeo. It's not the first time we've seen a downturn or having to move through an agricultural cycle. Manage, plan, use your risk management tools, et cetera. But there are bright spots as well, Melissa. I think about E15 or ethanol 15% blend and what that could do for additional domestic demand for the corn crop. So that opportunity is out there. And while China may be reducing some of its overall appetite for agricultural commodities over a given time span, there are other countries and other parts of the world, Southeast Asia in particular, where that demand for agricultural products is moving up. I don't think there's a single country that can replace the demand profile of a China, one for one, but there's certainly a grouping of export destinations that can. So that's a second point I'd make. And then the third point I would make is look domestically and look at the renewable fuel space. We've got renewable diesel coming online. We've got crush capacity coming online to support that transition to agri-energy with renewable diesel in California and the West Coast, and potentially making its way east with additional low carbon fuel standards in Midwestern states and even on the East Coast. And then we have sustainable aviation fuel, or SAF, that airlines are looking to add to the mix and swap out for jet fuel. And that could have certainly a feedstock ramification for corn-based ethanol. Now, we've got to get the carbon intensity score right and improve where we are today, but that creates another long-term domestic demand point for U.S. agriculture. So I think there are plenty of green shoots out there, Melissa. It's just another turn in the cycle that I'm sure we'll be able to weather.
Nelson, we could literally talk for hours, and I appreciate, and we could probably even talk every single month, and things would look a little bit different, right?
Sure.
As trends and things change. One of the things I find really exciting about cooperatives is that they've weathered time. They've been around for, a century. And we've certainly committed, our careers. And I grew up with right around cooperatives when I grew up in southwestern Minnesota, and they're a part of our blood. Clearly, cooperatives have something to bring, especially in these times where we are dealing with some challenging situations. Talk to me about why you believe cooperatives are here to help us weather these kinds of exact storms.
Well, as you said, Melissa, the cooperative system has weathered the ups and downs over 100 years. And as I've said, this is another down cycle, which we'll get through just fine. And I think the main message of the cooperative system is, look, you as an individual farmer don't have to go it alone. Leverage all of the resources that are out there in the cooperative system. Leverage the agronomy expertise. Leverage the energy expertise. Understand where markets are and what you can do from a risk management perspective. All of those tools and all of that expertise are absolutely at your fingertips in the cooperative system. The co-op stays on top of the latest trends. They stay on top of movements in markets, and all of those can be brought to bear for the benefit of your individual operation.
Thank you for your time. We covered a lot of ground today.
Absolutely.
We'll have to do this again. I really appreciate your time,
Happy
Melissa.
to do it. Thank you, Melissa.
Thank you.